Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly demand and support area. From here, in fact, all these previous rejections to the upside have been created, and what we can see is that right now the market is testing once again this exact same level of monthly support and demand, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this level. So the monthly time frame does seem quite bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the situation is quite clear. We can first of all notice a very precise rejection of exactly the previous low. In fact, from here, we had the previous weekly low. The market rejected it to the upside, then went for another test of the exact same zone, and immediately the market rejected it to the upside. This is a strong indication that there is a lot of buying pressure around this area, and we have already identified that this is a strong buying zone by looking at the monthly time frame just a few moments ago. We can also notice that from a weekly standpoint, it seems like the market is now facing another resistance area. From here, this previous move to the downside was created. Only a break above this zone could open the way to more bullish price action from a weekly standpoint. So this is a strong resistance zone that the market is currently facing. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily standpoint, this is where things start getting quite interesting. In fact, we can notice how we just had a very strong impulse to the upside, which broke above daily structure. Now, the daily structure that I'm speaking about is exactly the previous high. And the previous high is the level that you expect the market to retrace to in an ideal uptrend. In fact, when you have the creation of an ideal uptrend, you expect the creation of higher highs and higher lows, with every time the market going and testing exactly the previous high. And that is exactly what we can see the market doing here, every time going and testing exactly the previous high. We can see how the market already did it here. There is a possibility of seeing yet another test of the previous high and then the continuation to the upside, essentially for the market to create yet another daily higher high. Now, before we dig into more details into what we have here from a technical perspective on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's look at the data precisely for the NZD. Now, what we can see here on the NZD is that, first of all, we have to keep in mind that if we're looking at the NZD, we are already looking at NZDUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have once again started increasing. First, we saw a sharp decline from 30k to minus 16k. Now we're starting to see once again the net positioning starting to build up back to the bullish side, meaning that there is a good probability that now that the trend has inverted back to bullish from the bearish that we had, that now institutions could start buying again, and institutional buying could fuel this price higher. Now, we have to also keep in mind that when we're looking at the COT data, we will shortly, in just a few days, have the new report, and I'm expecting the net positions to be even more increased, meaning that during this move to the upside, we have seen more institutional longing. So I'm definitely waiting for that number. Now, in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. As I was saying, in a situation like this, what would I expect? Well, first of all, we have to dig deeper into what we have here on the technical side, because on the daily, we have only identified this previous resistance turn support. But what we can also identify is that since the market has an impulse and now the start of a correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And we can notice how we have the 0.32 and 50% retracements lining up exactly with this previous resistance turn support, therefore creating confluence of support at this area. And if the market will go and retrace to this confluence of support, there is then an increased probability of getting institutional longing, which at that point could further increase the probabilities of a potential push higher away from this area. So if the market will correct to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.